Yo, hello everyone and welcome back to Dividend Investor. I'm back today with another video in my dividend stock analysis series. Today I'll be going over the Coca Cola stock, or ticker symbol KO stock. Just giving a bit of insight into the dividend yield score out of 6. Also a bit of the history, a bit of information about the basic information about the company. Also the health of the company's finances. Before we get into it, guys, if you could please subscribe to my channel if you've not already. Like this video, give it a comment as well. Let me know what you think. It helps boost the YouTube algorithm. So yeah, that is it with the introduction. So Coca Cola, obviously, is a beverage company everyone's all heard of. Massive company, dividend king. Been paying dividends for a long time. Sell various non-alcoholic beverages worldwide. So we've just go into a bit of information now about the company on the tab on the Simply Wall Street app, which is, by the way, guys, is a really good app to use. So key information: the Coca Cola company, ticker symbol KO, on the New York Stock Exchange, founded back in 1886. That's way over 100 years ago. Soft drinks industry on the food, beverages and tobacco sector. They have a market cap of 195.117 billion, with shares outstanding of 4.29 billion. You can see they've got 86.2k employees as of December 2019. There was a bit of a dip in 2018, but it seems to be rising back up. Location is on the Atlanta, Georgia, United States. Obviously, there's all the listings of different stock exchanges they're on, but we're going with the New York Stock Exchange. Just going a bit of the health now. Let's just check how the company's doing. So, the analysis check, you'll get 2 out of 6 score. The KO short-term assets of 20 billion do not cover the short-term liabilities of 27 billion. Again, the key is there, it's short-term, guys. So if you look at a lot of these, a lot of the red is the short term, not the long term. Which, if you're a long term investor, that's what you're looking for. You can see there in the short term, the liabilities outweigh the assets. Which, if you can see, long term, the assets do really outweigh the liabilities, and that's what you want for a good business model. If you're making money, that's really good. Obviously, its debt to equity ratio isn't good. Equity is obviously what assets you own. If your assets are more than your liabilities, obviously the debt's higher. But the KO debt is well covered by its operating cash flow, 24.5%. And let's just have a look at the balance sheet now. You can see all the green is all the good things. So they've got long-term assets, physical assets, cash and short-term investments. They've got a debt of 49 billion, but as we said there, every company has a bit of debt. It's just how it is. But if the long-term assets and whatnot is more than the debt, then it'll be well covered in the future. So now let's have a look at the main point of the video, which is the dividend check, dividend analysis score out of 6. So you can see Coca Cola, it has a dividend yield of 3.61% and gets a 5 out of 6 score rating on the Simply Wall Street app. It's higher than the bottom 25% of dividend payers in the US market, which average at 1.86%. The blotch on the scorecard is that it's low compared to the top 25 in the US market, which average at 5.17. But I don't believe that. Obviously, the dividend yield is worked out in hindsight with the share price, so I wouldn't take too much notice of that. And the higher the dividend yield is not always the better. Score number 3. Its dividends have been stable in the past 10 years, which is good. You want to know that they're not going to have any chance of cutting the dividend soon. Score number 4, the payments have been increased, which is a main one if you're a dividend growth investor. If they're always growing the dividends year by year, which is really, really good. Score number 5 is its payout ratio of 76%. The payments are covered by the earnings, so not going to debt by paying shareholders the dividends every quarter. The dividends in 3 years are forecast to be well covered by the earnings, which is good, so more years of dividend increases. You can see there just in the graphs, the market bottom 1.9% and so on. So obviously Coca Cola really is a massive company, guys. I own these in my portfolio. Probably one of the first stocks I started to purchase since I started investing. Obviously, I'm not giving anyone financial advice here or any advice on their investing. Do your own research. I'm just giving you my opinions and the platform I'm using to one of the platforms I'm using to get my information about companies. So yeah, that is pretty much it for the video, guys. Just let me know below what you think of Coca Cola, if you own them in your portfolios, if you don't, if you're thinking about owning them. Yeah, just really let me know, guys, in the comments. So on that, I'm going to leave you to it, guys. Make sure you enjoy the rest of your days and keep on investing. Take care. Bye.